Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of April the 21st, 2025. Now, to get started this week, we'll begin where we always do with that very important US dollar index. Now, looking at the dollar index remains bearish on the year. Now, this previous calendar week, we can see that the volatility on the Monday bar has started, basically set the tone for the entire week. And the dollar did not break outside of that Monday bar range. Now, this is something we've been working on in the Vantage Point Live training room to be able to better identify what the actual trend is. So we're basing out down here. Our neural index is rising. We have an MA diff cross to the upside, and we're moving towards a period of known US dollar strength towards the end of the month or the latter part of this coming week. So right now, it does look like the dollar has a chance to recover. Our major support low is going to be 98.80. But again, we are in a holiday short week with Easter Monday. Happy Easter to everyone, by the way. So again, we'll keep an eye on that low, but be very, very cautious of a bear trap below 98.80, just to be clear. Now, when we mix things up a little bit here, we're going to look at gold contracts also. Again, is a full market outlook. So what I'm seeing here, gold continues to extend. Our initial retracement points for the coming week are going to be 32.45 and 31.43. If we come into a period of dollar strength, it's entirely possible that gold could get down to 31.43, but we're likely the buying opportunity would come between these two custom predicted moving averages based on the correlation to 31 other markets. So keep an eye on that area. But right now, gold is looking a little bit toppy here for sure. But again, we don't want to be trading overbought and oversold signals. We want to be trading momentum. So in my respectful opinion only, we let it retrace down into these levels and then continue to stay with the primary trend, which is clearly up on gold, but just try and get a better entry point. Now, the S&P 500, again, pretty resilient, but it remains negative on the year. We've had a retracement this past week. Another great example of using the T-cross long as a pivot level. So we've come back up, hit into the 54 area here. You can see up in this area about 54.39 approximately, where the T-cross long resides, and then we had a pretty strong failure. Now, again, we're in a holiday short week last week and this coming week. So we do have a medium-term crossover. That's the pink line crossing the zero line. We have very little downward momentum. Now again, using a custom, taking the predicted RSI, using a 60-40 split, and then speeding it up, changing it from a 14 period to a 9 period, because again, we want to get the lag out of it, but more importantly, what we really want to do is see if we've got downward momentum. And currently this is saying no. So if we do get another big sell-off tomorrow on Monday, then that is likely a buying opportunity at the end of the day or into Tuesday, because that is the cycle I have seen, is that a lot of crazy volatility on Monday, some very unusual media announcements that continue to come out on every single Monday, only to be forgotten or corrected on Tuesday. So keep an eye on that. But again, be very, very cautious of a bear trap on equities. But I will concede we've got to get above this T-cross long at 54.02 and stay above it in order for that trend to theoretically reverse. Now, oil contracts recovering last week. They are looking good. A very pronounced MA diff cross, the pink line over the blue line, meaning that the medium-term strength on the downside is weakening against that long-term strength to the downside. So when the pink line crosses over the blue line, that's a custom signal that you can only see in the Vantage Point software. And in my respectful opinion only, it's one of the most powerful trend-based indicators, but my favorite, it's contrarian also, meaning the market is moving lower and the MA diff is showing something very, very different, just like the neural index strength. Now, the good point to look at this is the neural index is red, but the neural index strength you can see is moving higher as the market is moving lower, and then ultimately it turns around and retraces back to the upside, taking out all the shorts. Now, for this coming week, that T-cross long 63.73, we have to break above that level, guys, or the primary trend of the downside remains in place. So if you're, again, using that T-cross long, we can straddle this area. People that believe or want to stay with the primary trend can sell into 67.73. The people that believe that oil is going to go higher, they can have buy limit orders just above 64. And if it breaks above the T-cross long, you immediately pick up that long trade because you know your levels. Once again, guys, this is an outlook, not a recap of something that's already happened. We want to be prepared going into next week's trading. So the indicators from VP are suggesting that we are going to break above that T-cross long, and setting up buy stops above 64 is a reasonable play. Now, as we look at Bitcoin going into next week, once again, Bitcoin is starting to form a buy signal here. So this is what we want to keep an eye on. When we break this down closer, you can see that every single day last week we're bouncing off either the long predicted or the T-cross long. So once again, our key levels here are 84,573 and 83.78. If we can hold this, then we should be able to move higher. My only concern is that MA diff cross, some of which you guys have affectionately called the death cross. I love that because it can be exactly that for a long trade. So keep an eye on that. But as long as that pink line stays above the zero line, I think we're still okay. But ultimately, this year, Bitcoin ultimately goes higher here, guys. We're in the third year of a 3-year rally before we have a major corrective move on Bitcoin, which is likely to occur next year. But that would be yet another buying opportunity. So for now, we're holding above our quarterly opening right now. That quarterly opening, 82,454. That is the key level that you want to keep an eye on. Now, as we look at some of the European markets and the VIX, I'll start with the VIX to give us some idea what we're looking at with the global indices, excuse me. So right now the VIX is struggling. We have an MA diff cross. The medium-term crossover has occurred with the pink line crossing the zero line. We have no downward momentum with the predicted RSI. And the neural index and the neural index strength are pointing positive. Now, we're still above our T-cross long, but I believe that that level is likely going to give way going forward here. We just need some of the tariff stuff to Trump to back off some of the tariff things a bit, and then we should see things looking a little bit better and the VIX moving lower. But we also want to make sure that we're looking at our friends over in Germany and Europe and what's happening there. And as I was talking last week, the yearly opening price really is a defining point here between bullish and bearish, or is the trend up or down? So the DAX has done a heck of a job fighting the sell-off we've seen in the US markets, but right now the DAX is at a pivotal area. We're at our T-cross long. We've got to get above 21,352, but we're also holding above that critical yearly opening price. So again, I believe longs are still reasonable here with the ECB cutting again. So that should boost the DAX. But again, when we look at that MA diff cross, you can see that same death cross here to the upside. So again, as long as we know where our key resistance is and our support, so what we could see here next week is this particular indice trade between the T-cross long and the yearly opening price, but we're looking for a break on either side of those two levels and then ride that wave, guys. That's the key thing. So that is my my advice on the DAX from my good friends in Germany. So now let's look at some of our main Forex pairs, starting with, of course, Euro-US. Now, the ECB cutting last week, you can see that the Euro has had a big push up to the high of 114.74 and then is completely stalled out here. So I believe we can retrace lower back to our T-cross long and our long predicted. Those areas are 113.21 and 111.27. I believe that the euro moves lower either way, tariffs or no tariffs, by the latter part of next week. Once we get past the holiday Monday, the Monday Tuesday reversal, then Wednesday, Thursday, Friday, I believe we will see the real price in the euro, and that is likely to be to the downside. But that would be corrective in nature, and those are our two main levels that we would look to buy from back down here. But I believe we have a decent sell right out of the gate. The euro aggressively moves higher on Monday, only to flip and turn down on Tuesday. But be very, very mindful of Monday and Tuesday this week, because technically Monday is a government and a bank holiday, so we may not see the real price to Tuesday and Wednesday, just to warn everybody. Now, if we do see some dollar strength here, then the US Swiss franc, you can see that if I attach that, we come back here 245, we bring this down like this. You can see that for the bulk of the week, the entire week actually, we have traded between the high and low of the Monday bar. Now, again, I will be looking at this in the seminar down in Tampa this coming week, but just to give everybody a teaser on this, you can see that the entire week, we did not break out of that Monday bar high and low, and this usually is a warning sign after a big move down like this that we're getting ready to break higher. So again, watch your low points here. Right now, the low support level would come in down around this 81 level. So we'll keep an eye on it. But for now, I think with that MA diff cross occurring, yet another thing pointing towards dollar strength. The British pound US dollar, once again, very similar here. The death cross looks to be getting ready to form here. That pink line turning down. Our neural index, this is, again, guys, when we talk about the neural index and the neural index strength, they are the same, but they're also very, very different. You can see a strong green here, but the neural index strength is saying, no, we're losing momentum here, and it's getting ready to turn. So if that pink line crosses over the blue line, you've got yourself a pretty good short here, guys. And your target areas there are going to be the T-cross long at 130.48. The very first target would be 131.87, because again, this is an outlook, not a recap of something that's already taking place. We're talking about what's going to happen, not what's already taken place. Very, very different. You'll notice a lot of conventional indicators, they show you things after they've happened. We're talking about it before it's even taken place, right? So with conditions that need to occur, that dollar index needs to move higher. And if it does, then it's going to pull a lot of the other currencies down, right? So that would be our initial targets, but I will certainly concede the British pound is positive on the year. It's positive on the month and the quarter. So these would be retracement areas, not necessarily a new downtrend. Now, when we look at the dollar yen, once again, the dollar yen putting up a fight, and you can see we're stalling out down here, that low down in that lower 142 area. But if we see some dollar strength mid to late week, then the dollar yen could recover, but that would be a selling opportunity. I truly believe the carry trade is going to come unwound, and it would favor the yen versus the dollar. So for now, again, we're basically neutral on this, but selling towards the T-cross long, 145.56. I believe that to be more reasonable. I think that the 143.19 area will break midweek, but the T-cross long will be our backup, and that's the area we would target for shorts. And I believe the indicators in VP will validate that later in the week, but getting in front of these things, the initial move is likely to the upside, and we would be looking for a short opportunity. Now, with the US-Canadian pair, again, we're going into a Canadian election here at the end of the month, so you're going to see some volatility around the Canadian dollar. In most cases, the Canadian dollar is stronger in May, June, and July because of rising oil prices. The intermarket correlation, of course, is that rise in oil and equities to help the Canadian, the Aussie, and the Kiwi. Very similar trade, if not the same, between those three Forex pairs. So right now we're holding down here. We do have a low point that's coming at 138.29. Be very, very cautious of a bear trap here, guys, because aside from oil, there is very little reason to be buying the Canadian dollar at this time. With the political uncertainty, the rising unemployment, falling GDP, but again, we'll monitor it. We'll see what the outcome of the Canadian election is, and maybe we've got a new path for the Canadian dollar. But my optimism on that at this time remains heavily guarded. So right now, we do have an MA diff cross that's warning us we could be turning higher. And our retracement points would be back to our T-cross long between 139 and 140.61. If I am going to sell the US Canadian pair, that's where I would prefer to do it, not down here, guys. I believe a bear trap is forming. Now, with the Aussie and the Kiwi, again, the Aussie struggling a little bit this past week, but I believe it can, again, can recover. We just need the equity markets moving higher. Sorry, excuse me, it didn't struggle this week. It just stalled at our that's what I meant to say, at our verified resistance high, 63.88. So that's where the problem area is going to be. So I believe the Aussie still goes higher this year. We're above our yearly opening price and our quarterly opening price, but our retracement point is back down here at 62.47. I would much rather pick it up near that, the T cross long. 62.76. That's a solid area for buying, guys. Or again, I will give something to the bulls here too. It's an aggressive one. You can buy the breakout of 63.88, but be careful of a bull trap only for the reason that in most cases the US dollar is strong at the end of the month. So after we get past that, I believe we'll have that long on the Aussie and the Kiwi. And again, when we look at the Kiwi, it's the same trade, guys, virtually identical. But the Kiwi is further overextended than what the Aussie is. So again, I think the Kiwi is a greater area to fall. So a way for the Forex, a lot of Forex people watching this video. So to understand Aussie, New Zealand, it makes up Aussie, US, and New Zealand, US. So I believe that should the Kiwi, the New Zealand US dollar fall, then there'd be potentially a very good buying opportunity this coming week on Aussie New Zealand. We have a low of 106.95, and I believe that to be solid support. So if we have a breakdown below that on Monday, chances are Tuesday it will confirm that it's a bear trap down here. So keep an eye on that. But if that New Zealand US dollar starts moving lower and Aussie US turns higher, then that's going to benefit this particular pair. But be very cautious as we have a holiday on Monday. So with that said, this is the Vantage Point AI Market Outlook for the week of April the 21st, 2025.